Today I'm going to be talking about a very specific stock, and that's namely the Tesla stock. And as there's a lot to talk about regarding Tesla, we're going to be talking about this in multiple different videos, so stay tuned for that. Specifically in this video, I'm going to be going over their automotive sector and basically how their automotive sector is going to be standing out against the competition and how they're positioning themselves in the automotive sector in general. But first, let me introduce myself. My name is Zino Rovato, and I'm dedicated in helping you build your personal wealth. I do this with in-depth analysis of stocks to help you master investing and understanding exactly what a good stock is and what a bad stock is. So if this is content that you're interested in, consider subscribing to this channel and smash that like button to help me out grow this channel even further. Now let's first start with a nice good old history class. It was founded in 2003 and it was set up by Martin Eberhard, who became the CEO. It was named after one of the most famous investors, Nikola Tesla. They launched their first car in 2008 with their Tesla Roadster series. This was the first car that was able to ride 245 miles on a single charge, which back then was an incredible feat because no electric car was able to do that for the cost that they were doing it for. In 2008, Elon Musk actually joined the company. 4 years later, they launched their first sedan, which was the Tesla Roadster S. That was in 2012. Next to this, in 2012, they also launched their supercharger network, which is something that is very crucial for something that needs to be used for electric cars. In 2014, they launched their autopilot. And after that, 2015, they launched the new car, which was the Tesla Model X. Next to this, next to the automotive side, they actually also launched their solar units, which were basically solar panels on the roof that they were adding onto their services in 2015. In 2016, they actually launched Solar City. This was a company that also Elon Musk was board member of, and that a lot of people were thinking of that it might not be the best acquisition. Next to this, the year after, they launched in 2017, they launched the Model 3. They launched this car mainly because they were in need of a smaller car. And because they launched this, more people were easily able to buy electric cars and go from there. Since then, Tesla has actually been in manufacturing hell. And what has happened there is they basically were having a lot of difficulties with scaling up their factories to be able to provide for all of the demand that they were getting for the Model 3, the Model S, and Model X. This lasted until 2019. Around 2019, they started switching this and actually had more issues with servicing their vehicles. So now let's talk automotive. So I divided automotive into two main sectors. Basically a bullish statement and secondly is a bearish statement. And I'm going to start this video off with talking about the bullish part of Tesla. First off, they have 4 successful models that they're producing right now that are electric models. The first one is the Model S, the second one is the Model X, the third one is the Model Y, and the last one is the Model 3. The Model S started in production in 2012 with a range of 348 miles. The cost of this car is between $74,000 and $94,000. Next to this, in 2015, they started producing the Model X, which is a car that have a range of 328 miles and a cost between $84,000 and $104,000 US dollars. Next, the Model Y is started in production in 2019, which has a range of 291 miles and has a cost between $49,990 and $59,990. Last but not least is the Model 3. They started the production of the Model 3 in 2017. This has a range of 250 miles and has a cost of $37,000 and $54,000. Every single one of these cars clearly outperform the competition. None of the competition comes close to what Tesla can offer in range and functionalities. With this, the competition is years behind of what the Tesla cars can actually provide, and this is giving them a clear competitive edge over their competitors. But Tesla doesn't stop there with these current models, they're actually adding new segments as well. One very well-known one is the Cybertruck. The Cybertruck is expected to start production either late 2021 or beginning of 2022. They're going to have a range of between 250 and 500 miles, and they're going to have a cost between $39,900 and $69,900. Next we have the Tesla semi-truck, and this one is very unique. This Tesla semi-truck has a production starting in 2020. They have a range of 300 and 620 miles, and the cost of this is between $150,000 and $200,000. And of course we have something very exciting. Their Tesla Roadster 2.0 is going to be launching. This is going to be happening in 2021, Q3 or Q4. A range of 620 miles and a cost between $150,000 and $200,000. Now, Elon Musk also announced that there's probably going to be a compact car, but nothing yet has been confirmed. But that is also going to be a lower segment than the Model 3. This will be able to make it possible for everybody to be able to afford an electric car. What Elon Musk actually said, the quote here is, "It would be reasonable to assume that we will make a compact vehicle of some kind and probably a higher capacity passed vehicle of some kind. These are likely things at some point, but I do think there's a long way to go with 3 and Y and with Cybertruck and Semi, so it's a long way to go with those. I think we'll do the obvious thing," meaning they will go for it once they have done enough on production with the current models. So basically they're going to be having vehicles for all different segments. Now let's go into the next bullish point, and that is going to be their production growth. Tesla's growth of new factories is basically at the same pace of their growth of new models. They're growing their factories at an increasingly higher speed. Right now they have their second factory in construction in Shanghai, which should be fully completed at the end of this year. They have Gigafactory Berlin, which is expected to be going online in July 2021. They have Gigafactory Austin, Texas, which is 2,000 acre lot, which is their biggest factory yet, and they're expecting this one to go live in 2021 as well. Now in the last earnings call, I also heard that they're probably going to be adding another factory, but that's going to probably be in the Southeast Asia region once these other factories are completed. The growth of their factories is explosive, which makes their possibility for growth also explosive. So this is not only even the most exciting thing. You also have something that's called Alien Dreadnought 2.0. The first Alien Dreadnought was tried out by Tesla but failed. This was basically a process that had allowed the factory to automate every single step of the manufacturing line. This would be so automated that it wouldn't even be possible for humans to be on the production line. Just think about the amount of possibilities if they would achieve an Alien Dreadnought 2.0. This would mean that their production line would never have to stop, meaning that the production of their factories is going to be unlimited. So this is going to be an incredible opportunity for them to grow, but also grow their operating profits, which is going to have a very good effect, both for profits and for the competitive edge, as they're going to be able to provide electric vehicles for much cheaper than their competition can. So let's dive into the third point, and that is the drivetrain of Tesla. Now, a lot of people are talking about the range of Tesla because of their batteries, but actually that is not the main reason why their cars are superior towards their competitors. Mainly this is coming from their drivetrain and the technology that they've built over the last 17 years. So what the drivetrain actually does is it converts the energy from the battery to the motor. And because this is such an efficient drivetrain, they're able to pull all of the energy out of the battery, which is giving them a much more higher range than all of their other competitors are. So the longer range that they're actually achieving right now is not because of the battery that they have, it's actually because of the technology that they've developed for their drivetrain. So the competitive edge here mainly is because of their drivetrain, they can extend their range much further than their competition, and this is one of the unique selling points for Tesla's, their range. So keeping a close eye to any developments on their drivetrain will show you where Tesla will be heading and how far they will stay ahead of their competition. So this is a very important part to keep in mind. So let's go into the next bullish point on why I think Tesla stock is a good stock. So let's talk about the software and app ecosystem. So a lot of customers are actually talking about the Tesla stock and they're saying this is a technology company, not a car company. And this is specifically the reason why. Most important is the way that they update their software. In traditional cars, you actually have to go to the dealer and get an update there. Tesla does not do that. Tesla sends you the update while you're driving and you can just update it on the go. So this allows for software updates to go much quicker than doing it through the dealership. Not only do the software updates go a lot quicker, they also get the information back from their cars, which gives them a huge amount of data which they can use to upgrade their systems, which is allowing for one of their most unique selling points, and that is their full self-driving feature. The full self-driving feature right now is priced at $8,000. And this full self-driving feature actually is able to stopping lights, at stop signs, and basically go through intersections by themselves. This is allowing for a lot of data to be accessed by Tesla. And Tesla is using this data to improve on this full self-driving features every day, which is giving them a very high competitive edge against their competitors. Elon Musk quoted in their last earnings call, "So it's almost getting to a point where I can go from my house to work with no interventions despite going through construction and widely varying situations. So this is why I'm very confident about its full self-driving functionality being complete by the end of this year. It's because I'm literally driving it." Now, Musk's own theory based on this is that when the cars will have the full self-driving features, they basically increase in value by around $100,000. The reason why he's saying this is because the productivity of the cars is going to go from 12 hours to basically 60 hours per week. Basically a 5 times increase in their productivity. This is going to lead their way to a full self-driving network, which will be able to compete against Lyft and Uber. Now, this is an incredible value for Tesla. Right now, the full self-driving market has an approximate value of $54 billion. But this market is looking to grow by 2026 to a $556 billion industry, basically a 10 times fold of what it is right now. So this is a major aspect to be bullish on the Tesla stock itself. And just think about that, that's more a 10-fold increase in 6 years' time. So this is a hyper growth market that you want to invest into. No other car companies are actually at this moment able to compete with Tesla because of the cost structure that Tesla is using. Right now, Tesla is looking to use videos to power their full self-driving, and because of the amount of data that they're getting, they're able to make it a very safe system. Other companies are choosing LiDAR, which is considered more safe currently, but they lack the amount of data that Tesla is getting. But we're not done there yet, we also have more bullish points. So let's get into the next one. In their latest earnings call, they actually mentioned something, and that was Tesla insurance, which for me was something very interesting to look into. I already talked about the amount of data that Tesla receives at this moment, and using this data, they get a lot of information about collisions, about how people are driving, etc., etc. So what Tesla is looking to do for their Tesla insurance is using this data and give you a tailored insurance program based on how you are driving. If you drive more fastly, you have a higher premium. If you drive more safely, you have a lower premium. This is currently being tested in California and is already seeing some success. So this has a very promising added benefit for the Tesla cars. This as well is a massive market of $308.8 billion, which is just an incredible amount. Just think about it, the possibilities of a Tesla insurance. Let's say you're driving and you're driving a little bit more quickly. You'll get a notification in your car or on your phone that if you keep driving like this, you're probably going to get an insurance premium or higher insurance pay. But if you drive more safely, you're also going to get a notification, hey, your premium is probably going to be going down. Now, this is an incredible opportunity for growth, and this is something that they have not yet explored at a very big scale. So I think this can be a huge opportunity for more revenue from this company. And now let's go to the last bullish point for this video, and that is regulatory credits. So a lot of people are bearish regarding regulatory credits, but I'm actually positive regarding this, and I'm going to explain you exactly why. And currently in 13 states, there is what's called a credit for electric vehicle makers. And if you don't make a certain amount of electric vehicles, you get credits. If you don't make them, you have to buy these credits. And as Tesla only produces electric vehicles, this allows them to basically get a lot of credits. So what to do with these credits? Well, basically sell them, of course. They can sell these credits to other automakers and basically get 100% margin. And this is exactly what Tesla is doing. Tesla recently sold to Fiat Chrysler a total value of $1.8 billion worth of credits over a period of time of 2 years. As Tesla gets these credits for free, this is basically a full profit margin for them, and basically they're making a lot of money from this. Now this is going to be expected less in the short term because all other car makers right now are producing less cars, and because they're producing less cars they require less credits. So in the short term the credits is going to be going down, but in the medium term this is expected to actually go up, which is basically meaning that other car makers are right now financing the cars and the sales of Tesla right now, making it possible for them to sell their cars at a cheaper price than other electronic vehicles and making it easier for them to gain more market share. So yeah, basically the competition is financing Tesla to be able to grow and beat them over the long term, which is brilliant and wonderful, and that's why I consider it a bullish point. So guys, these are the bullish points that I have for Tesla right now and what I consider that's going to be a major growth factor for them in the future. And next I'm going to be talking about the bearish points, and these are going to be the points that I think are going to drag Tesla stock down. But first guys, if you like this video so far and you like this content, consider subscribing. I try to make this content as engaging as possible. And if you like these type of analysis, subscribe to this channel and smash that like button to help me grow this channel even further.